Welcome Tuesday morning on the floor of the New York Stock Exchange. Indexes are up today, but there is a very important week ahead of us. Tomorrow is a big day, Fed day, but also GDP data. But we are going to talk about all this with my guest on the floor is Mark Otto, Managing Director at J. Streicher & Co. Mark, thank you so much for being with us.
Thanks for having me back.
So, Mark, I was saying it's a very busy week, very important week. We can safely say that tomorrow is a big day. GDP data, but also we will have a word from Federal Reserve. And of course, everybody on the floor is waiting to have a little bit of a hint on the future of QE3.
Absolutely. All ears are going to be on Bernanke when he speaks. Speculation is he'll probably be dovish. He'll probably reiterate what he said in June. However, you just have to rewind back to May 22nd when he sort of signaled the market that it could be sooner than later that there might be an unwind. June was the first month down for 7 months. So June, the market was down 6%. So after they had that violent reaction, Bernanke and several other House speakers sort of calmed the market back off the edge. So, since then, we've made all that ground back and then some. So I think, as dovish as he might be, I think that there's definitely potential for the market to overreact no matter what he says and draw its own conclusions.
And you were saying that Bernanke has been trying to calm the market for sure, but if we look at a lot of estimates from analysts, from strategists, from economists, we see that, for example, if we check out the Bloomberg survey, still 50% of the economists believe that the Federal Reserve will start tapering already in September. So although Ben Bernanke keeps trying to calm the market still doesn't believe him.
Well, the market's definitely going to draw its own conclusion. 50%, that's still, you have to remember, that's a coin toss, right? So it's a 50, what's the other 50%? So that's the way you have to look at it. I think something that everyone's going to be looking for is apparently there's going to be comments from the Open Market Committee. So they really determine a lot of policies for the FOMC. What I think people are going to be looking at is there a consensus within the Open Market Committee that has a bias towards ending QE3 sooner than later? That might be a tell sign, even more so than actually what Ben Bernanke is going to say.
Now let's talk about the data. GDP data tomorrow, the first data for the second quarter. It's a different calculation this time. So probably the data, the number is going to be a little bit higher because of this calculation. Do you think that the market will take account of that?
I think it certainly will. So GDP advanced 1%. The last posting was 1.8. So if it comes in above that, yes, that might draw some sort of reaction. However, more than likely we're going to stay within this channel. The S&P 500, we've been 1670 to 1700 basically. So we hit about 1698, what was it, last week. So I think we're going to be within that channel. I think going forward, any big reactions, a close above 1700 is what most analysts are looking for as the next bullish trigger and perhaps the next leg up.
So do you think that we can reach at that level by the end of the week if we have no surprise from Bernie Bernanke, and if the numbers on Friday will confirm that unemployment is still on the same level?
Well, yeah, I think the non-farm payrolls it's going to be the last big piece of information in the week on Friday. So they're looking at 185,000 jobs added. That's down from 195,000. So I think the recent average has been 202,000. So how people are actually going to read into that information and draw their own conclusion, I guess it's gonna be drawn upon how higher above the number of 185 is it going to be. So it's definitely a strong possibility. I think if we're going to crest above 1,700, it'll be on Friday.
Now a little bit of a comment on what is the future of the Federal Reserve. Of course, we came back to this on this topic again this week after Barack Obama during the weekend actually said that there is a short list of candidates to replace Ben Bernanke, even though Ben Bernanke officially didn't say anything about his future. Janet Yellen, Larry Summers, they seem to be the two candidates that now Wall Street is really evaluating. What do you think the market will prefer?
That is going to be a difficult read. It's so funny because you see these headlines about like Obama going golfing with Larry Summers. Does that increase the chance? I think that if you look at both of the candidates, I think that Yellen is more of a consensus type person. Is sort of what people are sort of drawing the conclusion to. Larry Summers is less in that mold. So apparently, I guess if you had to say, more people probably would favor Janet Yellen over Larry Summers at this point in time. However, I think that as it gets closer, we'll probably have more transparency from their thoughts, which may actually shape people's opinions as well.
Now, Mark, let's go back to the economy in particular. Let's go back to world economy. We know that you follow a lot of Chinese stocks here on the floor of the New York Stock Exchange. How has been for the last few days, of course, in respect also to all the economic news that we got from China?
Well, I'm seeing a very interesting disconnect between what's going on in the Shanghai Composite. You have to remember the Shanghai A shares and to some extent the Shanghai B shares. You have to live in China. So you're sort of living in their economy and investing in their economy. So if you look at Hong Kong and then the China-based US listed companies, that's where you see the big disconnect. It's a difference because it's a different pool of people investing. You have international investors that are betting on when China's going to make the turn. So we are seeing as a Shanghai Composite has fallen and has actually just the other day cracked that psychological point of 2000 again. We're seeing the opposite happen with China-based US listed companies. There have been some of them that are performing outstandingly over the past month. So if I had to pick two sectors, the solar sector, which has been heavily embattled. So over the past years, we've almost become numb to the theme of the U.S. imposing tariffs. Europe was almost, very close to imposing tariffs that would have gone off on August 6th. However, they reached agreements with China to put a floor into how cheap they could actually sell their solar products. So it may be one of those things where you buy the rumor, sell the news. We haven't seen the sell the news yet. However, the solar sector, SOL is a solar stock that's up over 100% over the past month. So there are many of these solar companies that are actually up 40% or more over the past month. Another sector that's really been hot or on fire, I guess if you want to be in the theme of solars, is the e-commerce sector. So the e-commerce sector out of China, recently Dang and Baidu have been performing extraordinarily well over the past month. So those two sectors specifically have been performing really well. Consistent sectors have been pharmaceuticals. However, that's pretty easy for a U.S. investor to sort of correlate to, because a lot of the times when you play defensive, you want to do healthcare. So pharmaceuticals sort of is along that line.
Could be different reasons.
Yeah, absolutely. Yeah.
Perfect. Thank you very much, Mark, for being with us.
Thank you.
And thank you for watching.